Welcome back, it's Jason Walter here. Total mortgage demand, which includes refis plus purchases, has now fallen to its lowest levels in over 20 years. This is thanks to a new report that was just announced today at the time of this video, which is the 31st of August, from the Mortgage Bankers Association, or the MBA. So in today's video, I'm going to take a deep dive into this latest report with you guys so you guys can make a more informed decision about whether you should be buying or selling a house. So with that said, let's go ahead and dive right into the video here, and hope you guys get a lot of value out of today's video. Of course, I really enjoy making these videos for you guys. And also, of course, I'm going to provide some additional insights that's beyond what's stated in this article here, of course. So it says here that mortgage applications decreased 3.7% from 1 week ago. And this is for a survey for the week ending August 26th of this year. So this number here, 3.7%, includes refis plus purchase applications across the United States here. So overall, total mortgage applications decreased 3.7% from 1 week ago. So again, as I always do in my videos regarding this, they break it down by refis plus purchases. So they have the refi index, which is a measure of people submitting loan applications for refis. And of course, they have their purchase index, which is a measure of people submitting loan applications for home purchases. So the refi index decreased 8% from the previous week, but was down 83% from the same week 1 year ago, due of course because rates have increased approximately 3 percentage points in 1 single year. On top of that, the unadjusted purchase index decreased 4% compared to the previous week, but was down 23% from the same time period 1 year ago. And by the way, mortgage demand for home purchases is now at the lowest levels since November 14th of 2016. I should say this is the lowest levels since November 14th, 2016, if you exclude the onset of this pandemic back in April 2020. And here's what I mean by that. So their current index right now for their purchase index is basically at 199.1. Back in April of 2020, we went to levels below that. But if you exclude the onset of this pandemic here, the current levels right now are the lowest levels since November 14th, 2016. On top of that, the total number of applications for home purchases has been more or less declining since January 31st of this year. So that's their purchase index. Let's have a look at their total market index, which they define by the composite index. This includes purchases plus refis. So the current levels right now, at least for the week ending August 29th, is 260.1. This is the lowest levels since at least approximately January of 2000, when the index was approximately 247.5. So the demand for total applications, which includes refis plus purchases, is basically at over a 20-year low. Obviously, the reason behind we saw this huge pullback in refis is because mortgage rates have increased. They have increased about 3 percentage points in 1 single year. And that's why refinance demand is basically falling off a cliff. So the reason behind this fallout of home purchases, or the fallout of home buying demand, in my personal opinion, is due to a lack of housing affordability. And let me share some numbers with you guys regarding that. So if you were to buy the average price home 1 year ago compared to right now, your average monthly mortgage payment would be about $605 more per month to basically buy the same house 1 year ago. So here's what I mean by that. 1 year ago, the average or the median list price in the United States was $350,000, and now it's $371,000. And I'm taking these numbers from the Redfin's data regarding the median sold price in America right now. So 1 year ago, at the time of this video, the average list price, or the average sold price, I should say, was $350,000, and now the median sold price is $371,000. So 1 year ago, the median sold price was $350,000. Also 1 year ago, the average 30-year fix was 2.91%. That gives you a total mortgage payment, which includes principal and interest, of $1,166 per month. Fast forward to right now, the median sold price is $371,000. And right now, at the time of this video, average mortgage rates are about 5.96%. That would give you a $1,771 housing payment, or $605 more per month to basically buy the same house compared to 1 year ago. In other words, your housing payment based on principal and interest payments would be about 52% more expensive right now compared to 1 year ago. Something else worth mentioning here is that this delta of $605 extra per month that the average home buyer is paying for a house right now compared to 1 year ago is accounting for the fact that home prices have actually come down. So for the 4 weeks ending August 21st of this year, again, the median sold price at $371,000, only a 6% gain compared to 1 year ago. But going back about 2.5 months, we were seeing 13 and also 14% gains in home prices. So home prices have come down from $395,000 down to $371,000. But despite this decrease in the median sold price across the United States, because we've been seeing such a huge uptick in mortgage rates, again up about 3 percentage points, that's causing housing affordability to be even worse than it was a couple of months ago. According to Joel Kahn, who's one of the MBA's associate vice presidents here, he said the 30-year fixed rate mortgage rate increased for the second week in a row to 5.80%, reaching its highest level since mid-July of this year. Mortgage rates and treasury yields rose last week as the Fed indicated that short-term rates would stay higher for longer. And he added here that total application volume dropped and remained at a multi-decade low last week. So by my math here, the total applications right now for refis plus purchases is at the lowest levels since approximately January of 2000. And this decrease is led by an 8% decline in refinance applications, which now make up only 30% of all applications. And meanwhile, purchase applications have declined in 8 out of the last 9 weeks as demand continues to shrink due to higher rates and a weaker economic outlook. However, rising housing inventories and slower home price growth could potentially bring some buyers back into this market later this year. In my personal opinion regarding this last part of this sentence here, that it could bring more buyers back into this market here, this is really based on mortgage rates as well as jobs as well, because if a lot of people lose their jobs, of course, home buying demand could potentially slow down further here. But let's talk about rising inventories as well as slower home price growth as well, and take a look at the latest trends we have from altosresearch.com, a great YouTube channel if you want to check them out regarding weekly housing market updates if you guys don't want to hear about housing market updates twice a day from me. Anyways, here's housing inventory across the nation according to them. So for the 7-day average as of August 26th of this year, we have approximately 555,000 houses for sale compared to approximately 431,000 back 1 year ago. And also in 2021, we had approximately 591,000 houses for sale. So we have more houses listed for sale right now compared to the same time period last year, but fewer compared to 2019 and also 2020, for example. But that's not the big takeaway I want you to take away from this part of this video here, because this increase that we've been seeing this year, take a look at this. Here's my note right here. So we have a 131% increase of housing inventory from the beginning of March of this year. So at the beginning of March of this year, we had approximately 240,000 houses for sale. And again, right now we have approximately 555,000 houses for sale. So a huge increase in a very short period of time, which of course is giving more home buyers more options, which is obviously good news if you're looking to buy a house, because we want to see a lot of houses listed for sale in order to cool off this housing market here. But here's something I wanted to bring to your attention though, and I talked about this in my video from a few days ago. We're starting to see this leveling off of housing inventory right now. This is because we're not seeing as much houses being listed for sale over the past several weeks now. So take a look at this, because inventory, as I mentioned, is up 131% since the beginning of March. But this trend line is basically flattening out ever since we basically hit August of this year. So the growth of housing inventory is not as great as it once was a few months ago. And as I mentioned in my previous video here, this leveling off of housing inventory could potentially slow down this housing market slowdown, and also dampening the effects of a housing market correction. And again, short-term trends, we'll have to see if this becomes a long-term trend. And of course, I'll definitely keep you posted regarding that. And going back to the MBA's report here regarding a slower pace of home price growth, we're also seeing that at a national level as well. Of course, every housing market's different though, but on a national level, we're seeing the home price growth at basically leveling off. So here's the median listing price according to altosresearch.com. However, as you can see right here though, the growth rate in home prices has been more or less plateauing over the past several weeks. And with that said, comment below with your biggest takeaways from today's video. Also, if you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day, and look forward to seeing you on the next video.